The nationwide action plan. The Income Tax Department has devised a comprehensive 16-point strategy to tackle the issue of tax evasion and non-payment. This plan is designed to be proactive, using data analytics to identify and investigate defaulters. The strategy is divided into 4 main phases, each focusing on a different aspect of tax compliance. Phase 1. Data analysis and identification. The first phase of the plan involves the use of data analytics to identify taxpayers who have not paid their taxes. This is done by analyzing data from various sources, including tax returns, bank statements, and other financial records. The data is then used to create a list of defaulters, which is used to identify the individuals and businesses that need to be targeted. Key features of this phase include plus the use of advanced data analytics tools to identify patterns and anomalies in tax returns and financial records, plus the creation of a centralized database to store information on defaulters, plus the use of machine learning algorithms to predict the likelihood of non-payment. Phase 2. Investigation and verification. The second phase of the plan involves the investigation and verification of the defaulters identified in the first phase. This is done by sending notices to the defaulters, requesting them to provide information about their tax payments. The notices are then used to verify the information provided, and to determine whether the defaulters have indeed failed to pay their taxes. Key features of this phase include plus the use of a robust notice system to ensure that defaulters receive clear and concise notices, plus the use of a verification process to ensure that the information provided by defaulters is accurate. TDS defaults plague the Indian tax system, prompting a 16-point strategy to tackle the issue. The Central Board of Direct Taxes, CBDT, has devised a 16-point strategy to tackle TDS defaults, a significant issue affecting the Indian tax system. Understanding TDS defaults. TDS stands for tax deducted at source, a mechanism where taxes are deducted from the income of individuals and businesses. TDS defaults occur when individuals or businesses fail to deduct or pay taxes as required by law. The impact of simplified TDS and TCS rates. The recent budget announcement by the Center has brought about significant changes in the way tax deductions at source, TDS, and tax collection at source, TCS, are calculated and reported. The simplification of these rates is expected to have a positive impact on the economy, particularly for small businesses and individuals. Benefits for small businesses. Reduced administrative burden. With simplified TDS and TCS rates, small businesses will no longer have to worry about complex calculations and multiple returns. Increased cash flow. By reducing the amount of taxes deducted at source, small businesses will have more cash available to invest in their growth and development. Improved competitiveness. Simplified TDS and TCS rates will enable small businesses to compete more effectively with larger companies. Benefits for individuals. Benefits for individuals. Reduced tax liability. With simplified TDS and TCS rates, individuals will have a lower tax liability, resulting in more disposable income. Increased financial flexibility. By reducing the amount of taxes deducted at source, individuals will have more financial flexibility to make investments, pay off debts, or save for the future. Simplified tax compliance. Simplified TDS and TCS rates will make it easier for individuals to comply with tax regulations, reducing the risk of penalties and fines. Monitoring and enforcement. Monitoring and enforcement authorities will monitor situations where TDS returns are modified multiple times with considerable reduction in default amounts. Enforcement will be strict to prevent tax evasion and ensure compliance with tax regulations. The importance of tax compliance. Tax compliance is a critical aspect of any country's economy. It ensures that individuals and businesses contribute their fair share to the government's revenue, which is then used to fund public services and infrastructure. In the context of the provided summary, the official's statement highlights the importance of tax compliance in making the tax system fair and equitable. The consequences of non-compliance with tax laws can have severe consequences, including fines and penalties, individuals and businesses that fail to pay their taxes on time may face fines and penalties, which can be substantial. Loss of business licenses. In some cases, non-compliance can lead to the loss of business licenses, making it difficult for businesses to operate. Damage to credit score. Non-compliance can also damage an individual's credit score, making it harder to obtain loans or credit in the future. ###The benefits of compliance *. The benefits of compliance. On the other hand, tax compliance has numerous benefits, including reduced tax evasion. Compliance helps to reduce tax evasion, which can lead to a more equitable distribution of tax revenue. Increased government revenue. Compliance ensures that individuals and businesses contribute their fair share to the government's revenue, which can be used to fund public services and infrastructure. Improved economic growth. Compliance can also contribute to improved economic growth, as it allows businesses to invest in their operations and hire more employees. ### strict action against willful defaulters *. Strict action against willful defaulters. The official statement emphasizes the need for strict action against willful defaulters. This is because willful defaulters are individuals or businesses that deliberately avoid paying their taxes.